Hey everybody. Um, so I was just getting so many messages on Twitter. I couldn't really keep up today with the live auction tomorrow. So I thought I'd come and do a quick space. I'll be just answering as many questions as I can, really. So we also got some messages from the Fahrenheit team, who will also be participating in the live auction. Obviously, there's lots of restrictions in bankruptcy code. But after I've done a few questions, I'll invite them up as well. I've put Natty up as co-host, and I think Tony V is going to be joining in a bit to co-host. But this is really your space. We're going to be going through what to expect for the live auction tomorrow, and answer as many questions as possible, really. So let me just give a quick overview. Right, I'm going to invite Tony to co-host as well. Perfect. All right, you there, Natty and Tony?
Yeah, it's okay. Yes, Simon, go ahead. Invite Tony as co-host and make your quick summary.
Okay, great. You there, Tony?
Yep, I'm here, ready to go.
Okay, awesome. Okay. Right, so the question I got a lot was originally there were, 4 bids, and it's now down to 3. And I just want to be clear so everybody can understand the structure. So one person or one group of people submitted a bid, and it wasn't myself or Bank to the Future. We took ourselves out of the process once I signed, an agreement with the debtor in order to act as a plan consultant unpaid. Then my work, and ever since really Christmas, was just drumming up as many people to participate in the bidding process. So if you go way back, I created a video on how to get the best bid, and I went through all the different elements, and that drum up a bunch of interest. And then the investment banks at Celsius, got the sponsor to publish their bidding process. Kirkland, I got Kirkland to change it to a stalking horse process. Kirkland confirmed that they changed it to that, and then they published a new timetable where other syndicates of people could see the Nova Wharf, term sheet, and they got to compete and see if they can do better. And they've got to do significantly better. What was awesome is that Celsius, the debtor, and the UCC figured out how to do a live auction process, which I don't think has ever been done. So I think what is going to happen tomorrow, I've got no idea exactly how it's going to go, because I didn't, in terms of how it's going to go live, but I don't think it's ever been done before. So this is a really, really interesting thing that people are going to participate in and experience. If you want to attend tomorrow, you're going to have to sign an NDA, and that NDA is going to be pretty harsh. I'm already an NDA under another agreement, and I've also, under that NDA, I've been speaking with many of the people that are involved in the auction tomorrow. So I'm not going to be participating and signing that, because you won't be able to talk about it. So if you are looking to review that NDA, it's a couple of pages long. Someone can post to the top. I think Nate could find it. I got a tweet where you just have to email them, and you have to do that by 5 p.m. You have to be signed and send it to them by 5 p.m. EST, I believe. And I don't mean equity security token. I mean Eastern Standard Time. So that's that. Right. So there were 4 bids. One of them didn't meet the criteria for qualified. I do know who that is. I don't want to mention it at this point. Many of you know or have guessed, but that they didn't meet the criteria for what they consider to be feasibility, and therefore that's there's only 3 people, and by 3 people it doesn't mean 3 new people. it means two additional people, which is a syndicate and group of people on top of Nova Wolf. And the way it's going to work, and maybe when the Fahrenheit team come up, they can correct any inaccuracies from what they know as participants. But everyone's going to be invited into the Kirkland Ellis office. They're all going to have a separate room, is my understanding. And they're going to, I reckon there's going to be some kind of live presentation. I'm not sure about this bit. But once there's a live presentation from each, maybe, it's really important for the integrity of the process that everybody does adhere to that NDA, because the way that I think it's going to work, and obviously a live one hasn't been done, is they're going to, each group or syndicate of bidders will be in a room, and the offer will probably be, or the improvement of terms will probably be revealed to Nova Wolf first, and Kirkland will probably go to Nova Wolf and say, look, here's a like-for-like comparable, here's the differences, here's what you've got to do in order to try and improve it. And so they'll then go and say, right, they'll go talk, and then they'll go into the next room and say, right, they've improved it this way. Are you willing to improve it that way? And there are two bids which are pretty much like for like under the same structure. People were criticizing for, looking like it was a copy and paste. So remember the history. So, the history was I put out a framework. That framework was used as the foundation that Nova Wolf ended up executing upon. And then they added an element of security tokens and various other things. Now, the copy and paste version is by design deliberately, because there's certain key things that the different groups of bidders believe give them a competitive advantage. So I'm not going to say who or what, but for example, some people might believe that a security token or a NASDAQ listing might produce a different result. And so those two, that's like a comparison that the investment banks could look at and say, well, we think, what's the risk that they don't actually ever IPO? Or are they going to be IPO straight away? How does that compare to a security token? And Tone had some questions which I'll answer just from my experience, not legal advice, from securities laws to clear up some of the confusion. And then you'll get close to a like for like, and then someone will say, well, they're charging an 8.5% management fee. That's worth this. This is how much the estate is likely to pay based upon the model. Can you improve it? Or they're putting up 45 million. Can you put up 100 million? And it's going to go round until eventually we can categorically say that this is the best offer. Now, the two like-for-like offers will also be compared to what's called a Chapter 11 liquidation. And a Chapter 11 liquidation is an alternative group of bidders can say, well, we'll distribute all the assets. Remember, I put together two bids. One was where we have a reorganization and we put all of the assets into a company, and then that company has like a mining company and various other things. That's the first structure. That's the Nova Wolf structure and the competing bidder structure. And then that can be compared to, what if there was a controlled Chapter 11 liquidation? And what could a controlled Chapter 11 liquidation look like? Well, it could look like giving all of the assets back, not necessarily requiring anyone to invest further, and just issuing shares in a mining company, private equity, and then maybe later that company can go public or something like that. So it's not a Chapter 7, where a Chapter 7 is everything's going to get sold. So we'll sell all your Bitcoin, we'll sell all your Ethereum, we'll sell all the mining operation. And so all the bids have to beat that. And so tomorrow, hopefully, I believe by the end of the day, we will categorically know in the rationale why they consider this the best bid. And it's been through its whole process of selecting all the people that have the feasibility to be able to execute, the financial capacity in order to commit to the process and write the check, and then a bunch of people that have track records as somebody that could actually execute upon this plan. So that's the process, and I'm very curious about how it's going to go doing this live, and whether there's going to be big gaps in between, or whether it's going to be a fairly well-structured, well-run process. We shall see. But all I know is that this is, from what I can tell, the first time it's ever been done like that. And I think the reason it's being done like that is simply because of the way that everybody has been trying to guide this case on these Twitter Spaces and everything like that. So that's the process. Again, without trying to reveal too much, because those that attend, but those that don't attend, you won't be able to get any of the details until it hits the court docket. And at the end of the process, you should see all the bids, know that anybody that was willing to sign the NDA also had some oversight of the process. And then that will lead to a disclosure statement. Now, obviously, the Nova Wolf disclosure statement is ready as the stalking horse. They get a breakup fee, and the competitors would have to significantly improve upon what you would get in a breakup fee. And so, that should lead to what is considered the best vote, the best bid, and the best plan. And the investment banks on both the UCC and the debtor Celsius, which is Centerview from the perspective of Celsius, and Perella from the perspective of the UCC, they release their models, and then the disclosure statement likely will lead to changes in terms of what we've already seen, or it will lead to a new group of entities and a winning bidder that would need to adjust the disclosure statement for their structure, their individuals, and you'd expect that to be probably a pretty big delay in the process. And so again, that's all happening tomorrow. And the end of it, there will be, I think, a simultaneous motion. I think they said, someone can correct me if I've got this part wrong. That will be, a motion in order to submit the auctions, and that's not selected. That's not the final process. It then goes through a motion. But at that stage, once we get that, once the debtor and the UCC's investment bank have picked the winner of the bid, it then moves over to disclosure statement, and then we need to solve everything. Sorry, I think my phone was ringing at the same time. We've got a few things that we need to solve. We've got the custody settlement that's almost already solved, the withhold settlement, the Series B, what belongs to the shareholders and what belongs to the creditors. The Series B side has already, the judge, if you didn't see it, hit the court docket today and said, Series B, your timeline was too long, dragging it out till September. And he put his own timeline through, which goes through to about July. Obviously, that is the substantive consolidation, which is that all the companies and all the entities within Celsius are the same, and one company is one way of determining. The other is the fraudulent inducement and using the examiner report and a class claim of fraud. So anyone that's looking to disprove the examiner report or looking to say there was no fraud is doing a massive disservice to creditors right now, but it doesn't matter because the truth is the truth. So whatever anyone says, it was a massively fraudulent operation, and we all know that. And the other one is valuing the intercompany loan. But if you get substantive consolidation, then you don't need to worry about that. So that's the is it the shareholders or is it the creditors? And then it's anyone that can throw a delay in the process. Alex Maszynski wants to return in order to disprove the examiner report blame it all on FTX, try and make his shares valuable, try and get his sell tokens not to be subordinated. So he's coming back to drain the estate for as much as he can. We've got to be very aware of that. And any other things that can delay. Regulators saying that they object. So we've got Department of Justice, SEC. They could throw objections out there. And so those are really just the different hurdles. It's really creditors and shareholder settlement. The different ad hoc groups agreeing. So the earn ad hoc, the borrow ad hoc, the custody ad hoc, the withhold ad hoc, and Alex Mazinski's sell ad hoc. Are gonna really decide and try and get to the fairest structure possible that will then make up what's Celsius's plan. Also, I know many of you are very concerned about clawbacks. Here's my opinion: clawbacks are going in the litigation trust, and all of the bidders are aware of the sensitivity of clawbacks. The UCC wants to add those into the litigation trust, and the judge wants that to be tried in court. So there are defenses. So if you're part of that group, then I believe your best bet is focusing on the defenses, because that's the process. But there's also the possibility of whether that actually gets included. Because the UCC wants it, they may see that as devaluing the plan, because in order to get vote from the plan, if they approve it, it reduces their clawback exposure. So it's kind of being used as a bribe, as it were, in order to try and get the plan through in a speedy fashion. And so, all of the syndicates of bidders and everyone that I've been trying to support in getting together the best process, they're aware of that, but it's not something I think is going to enter into the auction process. I could be wrong, I could be right. I think that's how it's going to work out. So if anyone wants to ask any questions around that, they can. But the point is, we need to get out of Chapter 11 before the price of Bitcoin and other crypto assets that follow Bitcoin reach the stage where they could essentially say, let's sell all the crypto, let's buy enough dollars, because the whole was $3 billion. And if the price of all the assets go up more than $3 billion, then the company could just say, and get the judge to approve, let's sell all the crypto, pay everyone off in US dollar terms. And if that process leads to a massive bull market, those crypto assets could get more and more valuable, and all of the assets where our money was used to create what I call the almighty rug pull, where you end up US dollar whole, but crypto very short. That's the game. And so any of the bad actors, like Mazinski causing delays in order to try and get his sell token, and any of the other games that are played in the process that cause delays, increases the likelihood that we head towards the Bitcoin halving cycle next year. And if we're not out of Chapter 11 with a plan approved, we increase the opportunity for that rug pull to happen. All of the bidders and all of the different syndicates, they wouldn't want that. They don't want to be involved in this process and get to that stage and then be rug pulled. So it's very important that we use our time wisely. We've got all of the different deadlines set up. We've got the bidding process. We know that we've got the opportunity to try and get the best terms. Within those groups of syndicates, people were asking, is Coinbase bidding? Is Gemini bidding? My understanding is that these are custody providers. And so ordinarily, a company like that wouldn't want to have anything to do with, all of the stuff that's happened at Celsius. But the syndicates of bidders have said, look, we're going to be taking over. We'll open an account with you. We'll use Coinbase or Gemini or Armorage in order to distribute all the coins, so that can be done in a very efficient way. They've been putting together all the partners. They partnered with different mining companies, and those different mining companies have different merits. different cost structures, different ways of structuring it. There's the security token versus public company, and the different things that can go through. So I hope that's clear. I'm going to use the rest of the time to bring up some of the team from Fahrenheit that asked if they could come up and share some details. I'm not sure what they can say, what they can't say. And Tone, I think I think we were in a group where everyone was debating the whole public company versus security token versus all the different regs. I've got a lot of experience in all that, so I'm happy to answer some of the questions. You're able to summarize what the main question were so the creditors can understand.
So the main thing we weren't sure about is we understand that bankruptcy process allows you to distribute equity to unaccredited investors, right? But does it allow you to circumvent the IPO process with the SEC? Like, do you get out of Chapter 11 and you can become publicly listed, or you could just distribute the equity to people that otherwise you wouldn't be able to, like unaccredited investors?
Yeah, so the history, and to help you answer this question so you actually understand it, is the 1933 Securities Act used to limit the number of investors that someone could have in their company before they have to meet the public reporting requirements. There's a difference between public reporting requirements and being a publicly traded company. Those are two related but different things. You could be a public reporting company, which is where you file every quarter your financial statements and all the disclosures that are required under the Securities Act. And you could file those every quarter. An example is Salt. They were a public reporting company based upon an SEC settlement, but not be publicly traded. Publicly traded just means you're on NASDAQ or you're on New York Stock Exchange. You could be a public reporting company that meets those standards, but tradable on what's known as an ATS. And so think about these three different things. The first one is you could be a public reporting company that still, got more than 500 shareholders. But there was a reform called the Jobs Act. And the Jobs Act, I was involved in that. It took us about 4 to 5 years to enact. But it changed that number from 500 to 2,000. So now, you could have 2,000 shareholders and still be a private company. But once you go over 2,000, you have to be a public reporting company. That's kind of what the rule is. Now, the next layer is you could be a private public reporting company that's tradable upon an ATS. That's essentially what's going on with the Provenance blockchain. An ATS is an SEC registration that allows a broker-dealer to match together buyers and sellers without having a full-blown order book where people can short the shares or people go long the shares. And all of the requirements of insider trading and all of that stuff. And then the third level is where you actually are a public company with public reporting standards and tradable upon a public national stock exchange, which is the highest level. That's Coinbase. Now, the bankruptcy code has a rule that states that you can circumvent the 2,000 investor requirement. So you could issue shares to all of your creditors. Let's say you've got 100,000 shareholders. You could issue all of your shares to them, but you need to meet the public reporting standard. If you wanted to actually list on a public national stock exchange and be a publicly traded company, you'd still need to file an S1. And an S1 is a very aggressive process of getting your IPO approved. I don't believe, and again, not legal advice, but we went through all this when we were in the bidding process. I don't believe bankruptcy allows you to circumvent the S1 requirement. It just allows you to be a public reporting company. And then if you wanted to later go public as a private company, you'd actually have to file that S1 and be approved. So it doesn't take you straight to NASDAQ, is my understanding.
So what some people were confused about is that let's say we go through this process. I guess they seem to believe that we can jump to NASDAQ without the S1. No, right?
No, I don't think you can. You can you have to meet a public reporting requirement as a private company. And then if you wanted to go on NASDAQ, you'd have to go through the S1 process later. If I'm wrong on that, I believe my counsel explained that, but if I'm wrong on that, maybe the Fahrenheit team can confirm.
I think you're right, Simon. The section 1145 allow the issuance of securities under a plan of reorganization and an exemption, but then you cannot trade it on a public stock exchange without the S1 form. I check an example of a company, and in the end, they had to fill an S1 form to be on the NICE. So I think you are correct.
Okay, great. I'd be amazed if you could circumvent the requirement to do an S1, go straight to NASDAQ because you're in bankruptcy. Because the way it works, the exemption works, is you have like a year to meet the full. You have to actually. An interesting one in this is that you'd have to go back to all of Celsius's accounts and ensure that they meet the requirement. Because if you end up with that assets, there's certain. Our legal counsel had a major process with all that as well. Yeah.
Well, just one thing on this. This is Mike Arrington. The S1 process of the NASDAQ listing completely separate, and there's absolutely no requirement that you go public via the S1 or any other way.
Hey, Michael, before you start, can we intro you?
Yeah.
People may not know. So, Michael, do you want to go through your background and your involvement in the process now?
Yeah. So I'm Mike Arrington. I'm at Arrington Capital. And we are one of the firms behind the Fahrenheit bid. Actually, most of the team is actually on this space right now. We have Steve Kokonos, who is our proposed CEO. We have Kelly Callahan. She is my partner at Arrington Capital. We've got Noah Jessup, who is the founder of Proof Group. And last but not least, I think we have Asher on here. Asher is the president of US Bitcoin. And so you have, I think, all but one of the main people involved in the bid.
Okay, if you're one of those people, can you put a request up now and we'll invite you up?
Yeah. So our main goal here was and is to listen. We've been listening for a long time, and we've heard a lot, and we've learned a lot, not least from you, Simon. You've been great in both sharing information and just helping us at different times. Because we've been listening, and I don't have to get into this right now, I can get into it later, but not at all. But our format is we didn't want to reinvent the wheel. Clearly, there was roughly $20 million a month being spent in various fees over months and months and months and months and months. And a strategy was formed through lots of negotiations, some of which I don't fully understand, that resulted in the Nova Wolf bid. And our goal was to take the parts of that we thought made sense for creditors and to eliminate the parts that we thought didn't make sense. I don't even know exactly how much we can disclose, so I'm going to be really careful here as just part of the process. But at least that much I think I can make clear. And yes, listing on NASDAQ, having no constraints on sales for shareholders other than standard NASDAQ rules, is eventually our goal, as opposed to a security token exchange. And I'll leave it at that. This is a conversation, not me dialoguing. So.
Great. Okay, great.
Noah is also a speaker. I know he has some thoughts on this as well. Noah, feel free to jump in, or we can, questions, or we can just shut up and listen.
I just say something super simple, which is a lot of the things sort of didn't make sense when we started to get involved, and we sort of said, hey, we all live in a BTC and Ethereum denominated world. That's how we benchmark things, and so we have to have a point of view that makes sense in those terms. And then with regards to that, even if you have a period where, since the reporting and the NASDAQ listing are kind of separate, it's a question of, do we have 2 clean years of financials? So in an interim period, the question might be, well, maybe it makes sense for some reasons to have a tokenized receipt of convenience of public equity. And maybe a platform like Ethereum with 260 million wallets, last time I looked, makes more sense than a blockchain that I doubt a lot of people on this call already have a wallet for.
Awesome, thank you. Yeah, I really don't want to screw up the process, so I'm not going to
Yeah,
try
and we're going to be
push
kind
too
of,
much.
we would rather just play by the rules as the bankruptcy court, who is super powerful, would like us to play. But the thing that I just really want to highlight and thank all of the folks who have sent us messages and notes and thoughts. We're listening, we're reading, and we're discussing everything coming to us very, very closely. And I know that this has been a long, painful, freaking road, and we're just deeply appreciative of that.
Okay, great. Maybe just a bit on process. Has Kirkland and the debtor explained to you what happens like at the end of the day for the live auction? Have they given you like a big overview on that stuff?
Well, I think that there's a bunch of different constituents, obviously, and I think that the different groups who are kind of going to collectively be able to make a decision, I think that they have to, one, show that whatever bid prevails is financially, like, objectively superior, and I say that because that's really how they cover their backsides, and then number two is there's going to be execution risk in any of the three scenarios proposed. And so I think that the group has to sort of say, for the creditors who collectively are joining whatever this plan is, there's going to be risk of getting it done, and that's something that they have to underwrite. And then the third piece is sort of what are the flexibility and what are the choices that are given to people as part of, a bid will prevail at whatever point in the auction process, and then what are the next steps? What are the next steps after that? And so you've got a group of people, maybe with representing different constituents and groups, who want to come to something that on paper looks like they are able to make a fair, true determination, and weighs a lot of facts into it. And the thing I just want to reiterate is, for us, if we show up and somebody else absolutely beats us and drives more dollars and lower costs and a better recovery to folks, then it's our time and money well spent. We're all crypto native folks. We've been in this.
I want to be really clear on this. I actually spoke to Bloomberg a little bit ago today, and we talked a little bit about Coinbase, and she was asking me to talk about the other bidders, and I don't know if she believed me or not, but I said I am so glad to see Gemini and that group here. And she's like, really? And I'm like, yes, like we need more than one bidder. And now we have three. And so no matter what, something better is going to happen than if no one else showed up. And that's fantastic for us. It's absolutely fantastic. Our main goal is to help restore the reputation of the crypto industry, because that's where all of us do all of our business. And it sounds like bullshit, but it's not. I hope we win. I hope we do. But I also hope that if there's a better bid and a better outcome for creditors and stakeholders, I hope that bid wins. And I will be happy to see that happen.
Yeah, Michael, I'm aware of that because that was actually my original goal as well. As a creditor myself, when we put Bank to the Future into the process, my goal was always to set up the parameter so that we could have this stalking horse bid and everyone could put together the most competitive side. Now, when that tried to happen, it was after the FTX. Everyone was in fear. There was, no real appetite. But since we've had a recovery, we've got now a group of all different types of people. So, the best outcome should come from this process. And then our job is to create something where on the other side, we can tell everyone how, a bit like the Bitfinex story. It was, we gave everyone a 16x on their share price at $1. Actually, it was 30 cents to $16. And they ended up getting loads of dividends. I never said that's ever going to happen again. But, it's being structured as a high risk, high return type of structure once everyone's got their crypto assets, and people are going to compete on different structures. So that's awesome. We've got Mary, our co-host here, who can maybe this is this is going to be the last opportunity for probably everyone that's involved in the auction. I'm sure they're all listening in, either under their real accounts, their alt accounts, or be listening to the recording. This is the opportunity now. The guys at Fahrenheit may not be able to answer, and if anyone from the other syndicates, Van Eyck or anyone is here and wants to come up, they're most welcome to as well. But if all you want to do is just share your thoughts on exactly what you would like to see come out of this bidding process, then please use this opportunity to raise your hand right now. And the guys can either answer or they'll say they can't answer. But this is an opportunity to be heard. And if you've got any questions around what happens from here, I'd be happy to answer that as well. So Mary, if anyone's got their hands up and wants to ask that, let's bring them up.
Absolutely. Thank you, Simon. I've missed everybody very much. I've been busy selling houses, which is a good thing. So
no, you've been busy hanging out with Chrissy Machinsky. I saw you.
Oh my gosh, no. Watching the basketball game. That was a shocker. No. If anybody wants to come up and speak, please, in the lower left-hand corner, just hit that request button and I'll let you up in the order in which you have asked. And having said that, the first person is going to be Dexter. Go ahead, Dexter.
Thank you for having me, Mary, and thank you, Simon, for hosting a space. I'm glad you could get these guys together, and I'm not going to waste my time asking about their thoughts on 81 cents and when am I going to get my crypto, because quite frankly, they don't actually know until tomorrow's bid. So good luck, fellas. I hope it goes well for you, and I already had my comments on how it goes on Twitter, and so we'll see how it goes. But for Simon, what I'm looking for out of this plan is one, a plan that, I want to go crypto long, and I want equity in a company that was that was built with my crypto. I think that's what a lot of creditors want. And for those that don't want to go long, I hope there is an off ramp for them that allows them to take their crypto out. Obviously, there would be some sort of haircut, whatever that is, but allows them to get their crypto and move on with their lives. Because frankly, I want to be part of a company where people want to belong and want to move forward and do what's best for everybody. I'm also hopeful there's some relief for those who have been suffering through this. Simon, I've listened to a lot of your Twitter spaces, and we just hear just awful stories of people suffering because they put their life savings into this company, and they really need some help. So I hope we can do something for those people as well. And lastly, I really hope to build this community back up to where it was before all this criminal behavior happened, because it really is a very strong and giving community.
The community is the asset that people just keep excluding from all of the dialogues.
Correct. Yes. So we need to have dialogue with the community, which Simon, you've been doing great with. And I think if we have a community with people who want to be on board, want to see the company succeed, and folks that don't want to be part of it can go, I think that'll be part of a great plan. Thanks, Simon. Out here.
Thanks so much, Dexter. Next we have Ramsey and then BSH.
Hey guys, hope you guys are doing
just one thing before Ramsey goes. Most of us at Fahrenheit are going to have to drop off to go have our lawyer yell at us for being on this Twitter Spaces in a few minutes. I think we have like 3 more minutes, but just to let you know, if we drop off, we'll do it quietly. And I really appreciate everybody here, especially Simon, for adding us in.
Okay, full disclosure, I know what that's like, because I had the same counsel that were yelling at me every time I went on a Twitter Space.
Yeah, so my bad. Simon, so you're pretty familiar then with equity with shares issued in a public company, correct? Which plan was it? Fahrenheit's, or was it a different one? Was I thinking of?
So I can't go into the specifics of plans.
Okay.
You'd have to attend the auction tomorrow. But
okay.
a liquidation would be a Chapter 7 would be where everything just is sold. And then the different options that will be presented is either a security token or private equity. In our bid, we were going to issue private equity without the security token. The original plan that we put together pre-Chapter 11 that we presented was along the lines of Bitfinex, which involved a security token, a debt token. Obviously, there was fraud involved, so none of that could be implemented. But the public, so they would either be issuing private equity with the goal of filing an S1 and becoming public after having 2 years of historical accounting, or you could go straight to trading on an ATS. Now, which one is which? I can't share.
Well, in your experience, what do you think is better? Because it seems like you said Bitfinex was a security token, right? Not private equity.
Yeah, so Bitfinex, we combined a security debt token, which I don't believe debt's going to be involved. No company's going to be able to take on the level of debt that Celsius created. But it involved a debt token for the whole, and then that was convertible into private equity that then was able to trade on an ATS or the equivalent of an ATS on the Bank to the Future secondary market. And then they never decided to actually go public. But that private equity can then be converted to public equity and traded. Now, remember also that a security token tradable upon an ATS, you can still pivot. You don't have to stick to that strategy. One of our companies are actually doing that right now. So I invested in the private equity of Exodus. Exodus did a Reg A Plus where they converted their equity into a security token. The security token didn't have the same level of market making and institutional interest that the people from Nova Wolf are saying that they're trying to drum up. But they're now pivoting to what, if they can get it approved, an S1 filing and a potential public offering. So you can pivot because you can still, a security token just represents your private equity, but it tends to trade at a discount to the private equity or the net asset value. So if you can make it work, you can make it work. We failed every time so far. One of the companies I invested in, Blockchain Capital, they did an issuance of a security token at about $1, and the net asset value is about $18 now. It was a private equity VC fund, but the security token was trading at about $3. But that doesn't mean that they can't just. The net asset value is still the net asset value. It creates an opportunity for people to buy at a discount. From those that need liquidity to those that actually are going to hold this. And just so you're aware, the money's made always in this succeeding and the longer you can hold. The closer you want to sell, the less likely you are to make the recovery. But then if the whole thing blows up, of course, those that sold would be the ones. But that would be the game of the equity. The longer you can hold the equity, and we did this with so many exchanges. We had I remember a bunch of people. We did the seed round for Bitstamp, and a bunch of people sold at a 400 million valuation. Then they became a multi-billion-dollar unicorn. We saw the same with Coinbase and various other things. So, that's the game, is succeeding and holding long term.
Okay. All right. Pretty interesting.
Yeah, but again, I just want to reiterate, a security token can pivot to private equity. So even if it trades a net asset value, it doesn't mean everything other than it creates an opportunity for others to buy that want to buy at a discount to net asset value, which is what you often see in Securitize and other ATSs.
Okay, gotcha. Last thing I was gonna say, the thing that's kind of just disappointing about this as we're watching the markets go up is like you guys were just mentioning earlier, the dollar paid in dollars terms, man. It's really a hit, especially watching it go up. So I agree with you on that one.
Yeah, it only makes a difference if we end up in a situation where the creditors can be made whole in dollar terms, and then they sell our crypto to make us whole in dollar terms, and then they keep all the remaining assets
Still getting burned.
in the shares.
Yeah. Still getting burnt on that one.
But yeah, it does suck. You calculating your value. But to me, the big thing here is that there's what has happened has happened. A bunch of sunk costs have been invested. So for me, and again, I'm not the same as everyone else. This is risk capital for me. But for me, I want the additional money to be invested so that we can take the sunk costs and make the most of those sunk costs and create in the Bitcoin mining operation. Because otherwise, the alternative is you just lock in the sunk costs. But I understand that people are at different risk profiles, and this money means a lot different to different people. And as Tony's always talked about, there are people that are retiring and don't have the time. They need the money now. So.
All right. Thanks, Simon.
Thanks,
Yeah,
Ramsey.
thanks, guys. Take it easy.
You too. Next, we have BSH and then Joe.
Thank you so much for holding this. Appreciate you guys. I just had a quick question. I got this sort of template email basically a few days ago saying from Celsius, you should have received communications from Stretto, basically ask about your eligibility to opt into the custody settlement. And I just wanted to make sure that I was cool by opting in. Is that okay? Not legal advice.
Yeah. So if I understand correctly, I believe you have a custody claim. Is that correct?
Correct. Yeah, I got a little small piece of it so far, but the most of it is combined with custody earned, so it's being held up in custody. But it was apparently part earned.
Yeah. So custody had a settlement, and this is my understanding. I'm not a custody customer. You have until the 24th to opt into a settlement, and what that means is that you're going to get two payments of approximately 36% and a total of 72.5% of your funds back crypto in kind. And if you agree by the 24th, then I think your first payment will be fairly soon, and your second payment will happen when the plan is approved. Once the plan is approved, I believe you get a second round where you can opt in if you didn't opt in. But it just means, if I were in custody, not financial advice, I'd be taking the funds and running, but you can still not settle. And if you don't settle, you can still fight in court, hire your counsel, try and get 100% if you think you're entitled to it. But I think most people in custody are looking to settle, and that doesn't make any difference in your earn claim or any loan claim or anything you have there. It's just simply the custody program. So that's what that is.
If I understand correctly, not financial advice. If you were if you were in this position, you're saying it's okay to opt in.
Yeah. Well, I'd go for getting my 72.5% of custody funds crypto in kind. I'd take that deal any day. That would be
awesome.
me.
That's what I did. Okay. Thank you so much. Appreciate you all.
Thank you. Joe and then Anthony.
Joe is gone. Let's go, Anthony.
Oh, okay. Hey, Anthony.
Hey, Mary. Hey, Simon. How you guys doing?
Yeah, good. Thank you. Sorry I didn't get you up in time for the other guys.
No, I wanted to push them on their bid a little bit, but it's all good. But I was basically at the end of the day, I think best case scenario here is, and this is how you win the bid if you're one of them listening in. You offer, of course, public equity, but NASDAQ equity. And instead of offering a management fee where you're just sucking the value out of the estate each and every year, which it's the complete opposite concept of building, a public company, because a public company, it's all about increasing shareholder value. So if you're going to suck a couple percent of the business away each and every year, you're not increasing the value of the entity. And the whole thing comes down with equity is to get multiples, as you know, Simon, and have the equity appreciate over time. So I think a model where, of course, creditors don't get 100% of the equity is actually better than do, and give them a piece of the equity and then have them, basically agree to a 3-year lockup as insiders on their equity, plus, of course, additional incentives for hitting certain milestones like company market cap and stuff. That's the model that I would propose. And if I was the UCC, that's what I'd be driving to them. Because at the end of the day, no matter which type of equity, of course, NASDAQ equity is way, way better than a tokenized, equity, in my opinion, just because of the liquidity and having a real market. And people could download Robinhood and go buy your thing. Simplicity, easy access. It's listed everywhere. It's like having your cryptocurrency on Binance or Coinbase. Same type of philosophy here. That is huge, but also the aspect of not sucking out the value. Like, we would love to keep, if where Bitcoin mining business is doing great, let's keep the Bitcoin on the balance sheet. Let's keep dollars on the balance sheet. It shows the strength of a company, and it also gives the business more value. So yeah, I think not having a revenue share model or a management share model, because like in the Nova Wolf bid specifically, we have to just hope the dividend is so significant that it's worth doing something like that. But by taking a dividend, which is a small amount of money in the grand scheme of things, leaving that dividend with the company and letting the equity appreciate is a better methodology, in my personal opinion. But you know how I think, Simon. So I just wanted to share that.
Yeah, well, Anthony's a growth investor. He doesn't need the funds now. He wants to put these funds to work to try and drive the maximum value, and that would be a strategy to follow that. And the dividend income is typically a very established company with a lot of an Apple, a lot of income, but they don't actually pay too many dividends. It's normally banking stocks. But you're not leaving the value within the company, so this is an earlier stage thing, and yeah. So those are the different models. The good thing about the stalking horse structure is that there will be a board of 7 people, 2 appointed by the bid sponsor, 5 appointed by the UCC, of which 3 of them will be approved by both the sponsor and the UCC, and they will set the dividend policy. So a really important part of this is who's actually going to end up on the board. And they'll be determining whether it ends up a growth play or an income play, and there'll be obviously some kind of expectation around that in the disclosure statement too. Cheers, Anthony.
Thanks, Simon.
Sovereign Horizon.
Hi, I was just, Simon, I recently saw a tweet from you describing how the Nova Wolf plan would treat loans, and I noticed that collateral would be in kind. And could you just help me understand how that is realistically possible to actually pay back the collateral in kind after, say, 6 years, which I believe is when they could pay back 100%? Why is that possible
Yeah, so
with loans as opposed to with earned? Sorry.
Yeah, so disclosure, the loan settlement hasn't actually been published. It may hit the docket any time now. I'd probably expect it to hit the docket today, before the auction. So all the details will be in that. But essentially, there's a sliding scale. If you want to, you renegotiate your loan, and this time it won't be a scammy rates or Ponzi economics. It will be real rates based upon the realistic rates, and then that collateral will be held in custody. Now, obviously, Ethereum or Ether in custody can be used in order to stake and generate a yield, which will produce an income on top of you renegotiating your loan. And so you will pay interest into the NUCO, and it could generate some yield by it being staked if you keep it in Ethereum. And then that will produce all of that value will go to shareholders. So earn are going to be the only shareholders, those that stay and earn. Those that settle their loan agreements won't be a part of earn unless they have a separate earn claim. So that generates income, but there's also going to be an option for you to stay in Bitcoin if you already had Bitcoin collateral. But I think it will cost you. So if you repay early within 3 years, then you won't get all your collateral back. But if you stay for 6 years, you'll get all your collateral back. But it will cost you a differential between the Bitcoin and ETH price, some of the staking income. And so you'll get a full disclosure on this. Now, for the equity side, we get a 2-way bet based upon whatever happens with the loan side. So the loans. This is why the earn ad hoc and the loans ad hoc are going to be, once this is published, in a bit of a negotiation, because what you guys do will become the business model for the earn and equity holders. And if, say, 50% of you decide to stay in ETH in order to get the maximum recovery, and you believe that over the next 6 years, ETH is maybe going to outperform Bitcoin, or any of those things, then the manager gets a fee from that. The management share token means that us as shareholders, if we hold that token, also get a slight cut of that. But those that stay in Bitcoin, we get compensated upon that trade, but also we get the yield from keeping it in Ethereum, which would be stakeable. There's different business plans as well. So some people want to do the old model that many of us would be very skeptical about. So we'd want to see full disclosure on that, where they're not held in custody. And they may want to. There was, the Fahrenheit team talked about quantitative trading, and they'd obviously be very, they'd have to disclose their exact risk parameters around that and what they would do that, but they might be able to generate something. And then if it ends up at a company like Abra, full disclosure, I'm a shareholder in Abra. I'm also a shareholder in Coinbase. Then you'd that business model is one where they use those coins and they diversify across different risks. And so it becomes really important that us as a community, we understand the different risk profiles. But the Nova Wolf one is where they're simply staked, and there's a business model that Earn can benefit from if it ends up in Bitcoin. So sorry to make that very complicated, but it is actually a pretty complex structure, but actually really pretty smart.
Okay. Yeah. Thanks a lot. It's been.
But yeah, there is
yeah.
in 6 years you have the opportunity to receive your collateral back if you keep it in ETH. And there may be a slight tweak when we actually see it hit the dock.
Okay, next up we have Virus.
Hello, can you guys hear me? Okay.
Yes.
Hi, Simon. Hi, Mary. Thank you guys very much, as always. Very excited about tomorrow's auction. I've already sent in my NDA, and I'm looking forward to that. Again, this is just kind of reiterating what we've all kind of talked about, but for everyone that's listening, and things are getting pretty important now. I remember Simon mentioned early on to kind of have an abundance mindset with all this, and that's really what I feel like is missing here. The Nova Wolf plan, it's been dead on arrival. It's given us just paper to appease Earn, holding loan hostage, and very obscure technology. It really goes against the community, which is it's good to hear that people here are starting to get that the community is what made Celsius what it is. Unfortunately, it was being driven by a big fraudster, and we're here now. But I think we can kind of build on what we know and what we would like to have, and a loan book, a company that's operating a loan book that allows people to tap into the value. That sounds valuable. A mining company, I would love to be part of a mining company. Now I didn't expect I was going to, be in this position, but keeping that abundance mindset, that sounds great. So this is just kind of putting out the good vibes, hoping for the best for tomorrow. Not really any questions, but for everyone who's listening, let's make this happen. Community is key.
That's awesome. And anyone can come up if they just want to share a comment just like that. That's really important. So it doesn't have to be a question. So yeah, that's it's nice to get back, because remember, when just to be able to get the exciting bit for me, all the shit in between is just awful. But the exciting bit to me is when we get to the actual structuring and understanding the vision of what can be, understanding the risks, so we're not entering into delusion or hopium or anything. And then now we're in a competitive process where we've got a bunch of operators that should at least lead to a driving. We can say this was the best we could do, given the circumstances. So let's make the most of this shit and make it happen. And as a community, if we all end up shareholders, I think it's going to be really interesting what happens from here.
Thank you, Virus. As RKS.
Thank you so much, Mary. Thank you, Simon. And actually, I didn't plan it, but my question follows directly from Virus, so thanks, and definitely in the positive mindset too. We hear a lot about kind of the value of the community, and Arrington spoke about that a little bit. I wanted to ask you, Simon, in previous investments you've made, how have you seen companies, I guess, value the community and kind of bring that into kind of financial benefits for the community? So, we're all folk who believe in crypto and we have invested in the past, right? The value of our community now is that, all of our assets are together and they can, build out a good mining business potentially, or, the loan book can, produce value. What are some other ways that kind of community can bring value, like financial value to a company in the future that might be used with our assets in the future? Thank you.
Yeah, awesome question. So number one to me is management. If I look back, I've made 100 investments in private equity. I can count 4 that were led by narcissistic sociopaths, and they all failed and imploded, just like this one. I've also had 10 of them that were led by complete missionaries that were in this for all the right reasons. And they became incredibly wealthy out of this sector, like some of them billionaires. But they still get up every day because they're inspired by the mission of what they're creating. And we have so much of that in our sector, from the original early days of Bitcoin versus the banks to where we are now as a crazy community of people that all fight each other and treat each other absolutely insanely online on Twitter. So the value of a community is at the moment not going to make much difference in the current structure. However, if we can get the NewCo to actually be an operating business, and I think the true value from my perspective is not just working with an alternative trading system ATS, but actually building our own ATS within NewCo. And so if I were steering this in the direction that I'd like it to go, I'd start with the $2 billion of assets. Let's create a successful mining company. Let's create a successful staking company, and let's restructure those loans. However, there's nothing in that requires the community, because that's just simply an asset play, and fine, if that's what it is and that's what it becomes. But I really don't want the $2 billion of assets to drive a significant amount of value in an alternative company. And so if I were part of the Nova Wolf team, I'd want Figure to compete by putting some of their equity in the ATS into the NewCo. And that was my original structure, that you have to align the people that benefit from the plan. So Figure would significantly benefit from the plan. And, when I'm talking to all bidders that have the same structures. But what I don't want is a bunch of people where this is a side project. And by side projects, you could have all the motivations in the world right now, and then your other business takes off, and it obviously consumes all of your energy. And so I never invest in people that are doing too many things, because I want all their focused on this. And the way to do that is align interests. And so what I'd like to see in the auction is that we don't create a process that just benefits somebody else's business. So, if Figure becomes an amazing ATS, then we need some of that equity in there, or the NewCo should end up building its own ATS. And I think there's a great opportunity to start with 2 billion assets. My biggest fear, actually, is also technology, that I just know how hard it is to create financial systems that are auditable in crypto. Security that doesn't end up with people losing their funds, which is why there's partners like Gemini and Coinbase and Anchorage. And doing too much is a problem as well. So one of the strategies is M&A, and I think they should acquire the companies that can actually make the operating code be able to handle the sheer volume. And that's one of the things. If I were trying to steer the ship, I'd like to take it to. So yeah, let's make sure that we build the value within Nuco, as opposed to ending up creating an incredibly valuable business that we don't benefit from.
Hey, Rob Christensen.
Yes, thank you. Thank you for taking my call. I couldn't agree more with your sentiment there, Simon, around Figment and aligning interests. So thank you for sharing that. Simon, you alluded to this, and I just wanted to come follow up with a more directed question to the Fahrenheit team and any other syndicates that may be listening. But can the Fahrenheit team elaborate on their intended corporate governance structure? That is one of the elements, as you suggested, Simon, that I think is really favorable for the Nova Wolf proposition, and I wanted to give them an opportunity to share that if they can. Thank you.
Yeah, I don't think they can. I think they've all been told off by their lawyers, like I used to every time I do these spaces. So I don't think they'll be able to answer. If you can answer, feel free to put your hand up and answer. My guess is that the structure that the Stalking Horsebeard and Nova Wolf have put together, I think, is as good a structure as it needs to get. That you have 5 directors appointed by the UCC and 2 appointed by the plan sponsor. And of the 5 appointed by the UCC, 3 of them have to be approved by the plan sponsor as well. I think that's as good as a governance structure as is needed. I think also I'd add to that you need a mix of experience from traditional finance, experience from operating a public reporting company, and a Nasdaq listed company, depending on where it goes, but also a bit of Bitcoin in there, so that someone that's been around the block and knows all the different crypto scams and blockchain scams, and doesn't get too excited by like the TradFi people do, where they get very excited by blockchain and all that stuff. So a mix between, but then also the Bitcoiner needs to, I think, be held in check slightly to open their vision a bit and understand that there's also interesting things that can happen in these wider markets. I think if you could get that right balance and combine it with the transparency of a public reporting company, and the governance that a public company needs to adhere to, and get the right balance between skepticism, opportunism, I think that's what you need. And so I think that structure should just be taken across, and then also making sure that the board members are not seeing this just as a side project. You can get that mix between those that are not involved in the day-to-day, performing the function of like a non-executive director, but you've got to have some people that are driving this, where this is their primary focus, and that needs to be integrated. And that's a proven, tried and tested model.
Simon, just by way of follow-up, thank you for your answer. Do you anticipate that any of these firms will move the operations offshore? And I'll step down after you answer that one.
I think there's huge benefits for diversifying US and non-US. We saw that. The reason we're alive today is we've been through every single bear cycle and every single regulated structure with the longest standing company in Bitcoin, and we survived every single cycle because we modularized and we're able to adjust to whatever is thrown at us. So at the moment, the regulatory environment in the US is very confrontational, and US companies are going overseas to look at how they can hedge their operations. That's allowed us to remain very flexible, and it's actually crucial. So, for example, if you look at Celsius, they had to they cocked up all the US tax, all the UK tax, all the intercompany loans and structures, all of the accounting reporting, all of the regulations, because they started in the UK, then moved across to US, rather than using the best of different jurisdictions. And so obviously the only reason one of the main reasons why we couldn't compete in this bid is because we're not a US first company. But there's massive, for example, all of the companies that I'm investing in, they're all opening bank accounts in Hong Kong, various other jurisdictions. I don't see how you survive as a business without getting both strategies right, but you can't do too much in one go. So if you can get the SEC to sign off on this business model, then that's a really interesting opportunity and fairly unique. But we just need to make sure that all that value goes within the NewCo.
Okay, next we have Ron Paul. I'm sorry, Ramsey and then Ron Paul. Sorry, Ron Paul. Ramsey? Oh, Ramsey stepped down. Go ahead, Ron Paul.
Yeah, I just joined, so I didn't hear what happened before Anthony. But yeah, I agree with you, Simon, about Noble Wolf. I think I tried to raise that point numerous times, and that's why I don't think it's a real bid, because if it was a real build, and they are trying to really create a company, I think it will be, as Anthony said, on those structures. But one of the things that I wanted to raise, I was checking, I was very intrigued by VanEck, is that VanEck does have a crypto ETF. It's called DApp, VanEck Crypto and Blockchain Innovators. And I think for me that seems at least the strongest bit. I think this could be like a vehicle to unwind the liquid assets. It could bring some trust, as VanEck, of course. And you have Abra, which is, I think, located in Europe. I think that could open some interesting solutions, especially with the MICA approval. But yeah, I just wanted to know if you see VanEck as someone that's trying to be the vehicle to unwind potentially these illiquid investments that Celsius has.
Yeah, so that syndicate positioned nicely to do a really nice Chapter 11 liquidation. And Van Eyck, I was really, really happy when they entered the race. Very, very cool company to be involved in this process. Got so much experience. They were, one of the early ones trying to create the Bitcoin ETF. They haven't succeeded at that in like the spot side, but they got a lot of experience. And so, Bitcoin first type of people that came into this because they had a lot of experience in alternative investments and gold markets, and then led by somebody that saw Bitcoin from that perspective and started creating alternative investments as well. So I'm just really happy that they're here alongside all the others, and just getting that right. But I will tell you something that now we can talk about it. But when we originally put forward our plan and we said a 2 and 20, we were never going to charge a 2 and 20. We just put our worst offer forward, so that it can only be improved upon from there. So you'd expect that Nova Wolf put what they think is, the harshest terms. And then now that they were originally just going to be selected as a sponsor, but now it's actually in the competitive process, you'd expect those terms to change. I do think it's weird that an operating company that charges, a management fee, it's just weird. And I think tomorrow there's going to be competing structures, and we're going to end up with the best structure, hopefully. Thanks, Ron Paul.
Okay, our last speaker is Helix. If anybody wants to come up, please lower left-hand corner, hit the request button. Question or comment?
Yeah, it's a question. Question about process. Let's say tomorrow the bid ends in a chosen winner. Do the UCC and the debtors still have exclusivity in that they can ratify that winner, or is there still going to be some kind of vote required by all the creditors?
Yeah, okay. So I believe that by the end of tomorrow, a winner will be selected, and they will be the plan sponsor. Then we move to disclosure statements, and then we move to all of the objections. And so it's got to get through several layers of objections. And so the first thing is that it will go through all the disclosure statements. The DOJ and the US trustee have to sign off on that. The regulators have to not object. But we saw in the Voyager case, even when the DOJ and the SEC do object, the judge can, put it through a process as well. Also, you have the ad hocs and creditor versus shareholder argument that could become bad actors. So it may be in one ad hoc's interest to turn it into a Ponzi scheme. It may be in another ad hoc or shareholders or other interests in order to drag the process out to try and see if you can play the halving cycle. And so you've got to be aware of the games, and we've got to be able to put together a decent defense against the games, and hope that the judge, who's been pretty sharp until now, can see those games, detect those games, and put in mitigation methods in order to get through it. And then finally, it's got to get creditor vote. So with the vote, everybody will be put in different classes. So there'll be what's called a convenience class under the current structure. Whether that changes tomorrow or not, we'll find out. Which is that everybody below 5K can get a higher recovery and not participate, or they, in the equity. The custody will settle, which is a process that's happening right now. Withhold will settle. The loans will settle, and then and then everyone will have their own class of vote. And if, for example, nobody votes for the plan, then one of the classes could cram down the plan upon the other, and then that would go through a court process. And so also you've got the whole clawback issue. There's obviously going to be very contentious, and the clawbacks are going to want to litigate. The judge has already said that they will have their time in court to do that. So all of these different hurdles, that's why we just got to get to this process. We've got to stick to the timeline. We've got to forecast some of the hurdles that can follow. We've got to eliminate as many of them as we can. And we just got to make sure that we can get all this executed before the crypto markets rip and we could end up in the almighty rug pull scenario.
Right. So tomorrow's a big step, but we're not out of the woods. You've just mentioned there's many things that need to happen after that to have an outcome good for all. So hopefully, yes, prayers are needed still even after tomorrow. Thank you.
Axiom?
So, yeah, I wanted to discuss some questions about the loan agreement. Hopefully it gets negotiated to better terms with Fahrenheit or Van Eyck. But I don't know. I just really, really hated the Nova Wolf plan. It was like so much downside, and they got all the upside. It just was completely unfair. Like we have to hold. They have to hold the asset for 6 years for us to get our collateral, and we don't even know if the new code could survive that long. Because in crypto, 6 years is like a dog. It's like It's like for every 1 human year, 7 years for them. That's how crypto is. It's an eternity, and I'm concerned that okay, you give this promise of you'll give us the collateral back, but then if the company goes bankrupt, how could they, uphold their financial obligation? Then we'd have to deal with the whole process all over again. So that's why I think 6 years is way too long of a time frame to do that. At the same time, I do also understand that they don't have the coin to give back in kind, but it's unfair for, like, for instance, in 3 years they give us back 45% of the coin plus they get interest. Then they should give some sort of incentive then, so that people, they relinquish the debt that Celsius has to them, or whatever, No Wolf or whatever Nuco. Like, for instance, if I get 45% of my collateral, then maybe they could give equity as a difference to, kind of make the person whole. But just giving back only 45% and nothing else is just illogical, because then you could get liquidated, plus you're probably going to pay a higher interest than 1%, and it just doesn't make sense. So I really hope that the new companies are listening and they have a fair negotiation, because I really, really don't understand the loan agreement. I think it's horrendous and it's completely illogical.
Yeah, cool. So thanks for sharing that input for everyone to hear. My guess is that the borrower and loan ad hoc have put together the negotiations that will hit the court docket. And remember, the biggest creditor group, Earn, may object to that. So whoever puts together the plan isn't just trying to optimize for the loan vote. They've also got to try and get the Earn vote. So on the other side of that, you have the Earn group that have no opportunity to take full exposure to get crypto whole. The loan group have an opportunity to get crypto whole, which is what I think most people would want, because people didn't choose here. And so when you're given that perspective, I'm playing devil's advocate, giving the other side of the perspective, knowing the Earn group, which now has an ad hoc, are going to object to what you consider horrific. They consider I'd kill to be able to get all my crypto back. Then, in terms of risk, that also plays into the model. So, some of the models, they want to do the same with your crypto, but in a much better structure with much better oversight. So, you wouldn't expect all the fraud, but they could end up putting your crypto at risk, and then the whole thing could blow up, as you know. That's got to get past the SEC. I don't see the SEC allowing that to happen. So, that's one model. Another model that the Nova Wolf had put through is that it could all be held in custody and generate yield through staking, which means that you don't need to put the additional risk. And so, if you put it in custody, if that's structured correctly, then even if the operating company or NUCO goes bust, the funds in custody should be segregated. It's not Celsius cowboy custody. It's custody where the funds are actually held in title and belong to the creditor. Now, there may be, an omnibus account, but it will be held with an independent custodian, whether that's Gemini or Coinbase or Anchorage. And so you're analyzing from the perspective of your bad experience with Celsius. In the disclosure statement, there's going to be plenty of calls where we can truly analyze these risks and say, right, well, is this coins at risk? Is this structured as a security? It's not going to be, this isn't going to get past the regulators, and it's also going to be a public reporting company. The concerns that you may have, these are all going to be risks that are known and understood, because we're not dealing with, a cowboy structure anymore. We're dealing with the correct licensed entities with the correct disclosures, with the correct regulatory requirements, and any risks have to be disclosed and understood. So just adding those perspectives, because you may feel that it's shafted right now, but you may not understand that some of those risks may not be there, and it's also got to get the vote of the largest creditor group, which is Earn.
Okay, next we have Dexter.
Hey, I'm back. I actually had two questions for you, Simon. What can we do as creditors? What can we do to stop the games from being played after this bidding is done? You mentioned we already saw it with the Nova Wolf. We know Alex is going to try to extend the process as long as he can. Is there anything we creditors can do to help speed up the process so we can finally get back to our crypto? And then my second question is, during the Voyager vote, the vast majority of the people didn't vote for yay or nay for the plan. Do you see that being an issue for us if the same thing happens during our process? Thanks.
Okay, interesting. Yeah. So you just got to look at the major settlements and make sure that they happen and they're just resolved as fast as possible. So the judge put out the timetable. I posted it on my Twitter for the intercompany loan side. Personally, maybe I'm missing something, but I don't know why we're even dealing with the intercompany loan. If you just started with substantiative, the word that I always get wrong, consolidation, then it's game over to everything else. And so why can't we rule on that? And then everyone knows whether it was one company or multiple companies. And you don't necessarily even need to bother with the intercompany loan and that. So that's game one. But there is a timetable, so it has to stick to that timetable. And the judge made it very clear that he believes that the Series B are playing a game, and he's aware of the game, and he wants to make sure it doesn't happen. So he ruled when the shareholders wanted to drag it out till September. The next thing is allow the examiner report to be litigated and make sure Alex Mashinsky doesn't get in the way of the process because he wants to disprove the examiner report so that then he can drag it out so that he can then drain the estate so that he can then try and get his subordinated claims. Don't fall for that. If any creditor is supporting, trying to disprove the examiner report, the truth will be the truth. And we all know that there's fraud there. But if anyone's on the wrong side of creditors' interests, then at least this process reveals people's true colors. And we get to see people's true colors as part of this process. So those games, just being aware of the games, and the UCC said that they're already on top of that Alex Mashinsky won't, get any of that. But I think they need to be more aware of some of the different games there. And obviously, he tried to bribe the Cell 81 victims, and some of them, are either falling for that or they're, I do want to find a genuine way of figuring out the issue with and again, it's a small part of the estate, so it's not going to really matter in the grand scheme of things, but Brzezinski will probably use it to cause as much trouble as possible because he needs to get as much money as possible because the litigation trust is going after him after this, so he wants as much money from the estate to fund his defense. And then he's obviously got everything that comes next after this process is through. Those are, the big delays. But I do think if there was I think Cam proposed some different proposals on how to filter through the genuine victims versus those that were just, receiving free coins and in that group. I think maybe that needs to be looked at. And then in terms of like what happened with Voyager and everything, this is why I never wanted to distribute Cell, because I knew that the Cell token would cause a worse issue than with Voyager, because at least it didn't have everything that was covered in the examiner report. But I tried to get that one early, and that's why a side of the community turned against me, because they I was just trying to give them a heads up on what's coming 9 months ago, and here we are today. But yeah, just understanding those games, making sure that we're all negotiating in good faith as ad hoc groups. We're using Twitter in order to progress things, and I think most people have been doing that. And just being aware of, there's also the clawback issue, which is I think going to be litigated as well, and they'll get their moment in court. Those are the games. Just being aware of them, knowing what we got to get through, everyone pushing them forward as fast as possible, getting through in a timely fashion, settling negotiation where needed, And yeah, that's all I can say really. My first chapter 11.
Okay, next we have Clarence and then Keeper.
Hi, everyone, and thank you so much again for having me on. Simon, there's been quite a while I've wanted to actually be able to speak on one of your AMAs here, and personally thank you for everything you've done for me and for everyone in the group. It was a the Celsius saga was a very, very dark time in my life. Anyway, in reference to the loans, I understand. Yes, for me, 6 years to wait to be made whole, I'm perfectly fine with that. I'll wait 10 years if I have a high level of confidence to get that back. So I'll take that deal certainly. However, having said that, I know, of course, as you mentioned, the scammy rates of 1%, et cetera, for the loans, yeah, extremely low. I did start looking around the last few days at just different, competitors in the market and their rates for loans. It is quite alarming. I've seen a lot of rates are like 12%, 15% in some cases, and I hope I'm not, scaring anyone else listening. But I guess the question is there been any discussion with regards to what the interest rate for loans may look like? Has that at all been brought up? Or is that something that may be brought up tomorrow to your knowledge? Thank you.
Yeah, so again, it's a challenging one because if you want to put the rates down, it's kind of like you're the sponsors of the Feds here. There's consequences to every action. You either have a recession or inflation, and then you destroy the banking system in the process of setting your rates because you're trying to artificially set the rates and rather than leave them to the market. And so the sponsors have to set their rates. We're in a rate increasing environment at the same time as the Fed having to pivot. So the initial negotiation put those, I believe, between 7.5% and 12.5%. I think the way to start looking at real rates is if you look at the operators that are genuinely doing what Alex Majinsky originally pitched, which was that you have, people that are, institutional borrowers that are paying a rate, and you have people that want to borrow against their Bitcoin. You put those two markets together in a peer-to-peer market as well. If it stuck to that, then I think it would have been between 7.5% and 12.5%. So I think the initial rates are there, but remember, if you want to put those rates up, then you lose some of the borrower vote, and if you want to put those rates, those down, then you lose some of the earn vote. So I'm not sure how much negotiations are going to happen there. I think the structure, maybe someone comes up with a better structure that we haven't thought about. But I actually think that's going to be an earn ad hoc versus borrower ad hoc settlement. And hopefully that's done sooner rather than later. And the first is acceptable terms. And then once we get the disclosure statement, I think we should expect to see some modeling on their assumptions around what they think that makes to earn. And also making sure that we don't create a scenario where the company has a huge liability that it can't meet. So yeah, that's it's a very, very interesting model.
All right, Clarence, anything else?
No, that was everything. Thank you so much, Simon. Yes, I was hoping for at least single digits. Thank you.
Yeah, awesome.
All right, go on, Keeper.
Hey guys, hey Mary. I'm glad you're back. Yesterday, last one was a little doozy. I might have gotten into it with somebody in the crowd.
I'm sorry about that, Keeper.
No, it was cool. I mean, it's not an easy task. I realized that. You keep things very calm. I really must commend you on that. And Simon, I'm very convinced it's some form of dyslexia. I have a hard time with it myself. Fortunately,
I've got serious dyslexia. Yeah, my typos are fucking awful.
Same here, man. So I got a fix. Well, actually, Regina has a fix for us, man. It's called Subcon. It's just so much easier.
It's called hash token.
Yeah, I like the prefix of that better than the suffix. But yeah, you know where I stand. But hey, I think I agree with you though. I feel like we're kind of in this place where things are. I mean, it would have been a lot easier if we just went into subcon right from the get go. Since it shouldn't have really taken 10 months, but maybe Judge has kind of helped work out a lot of the kinks. At least that's kind of how I'm seeing it right now. He's taken away. I mean, he's kind of thwarted off certain adversaries, and made it a little more difficult for them to kind of prevail in the situation against us rather. So I mean, so I don't know. I mean, I'm feeling good about that. I kind of wanted to get your take on that as well. It did seem like you're implying the same thing based on what you said earlier. The other thing I'd say is, hey, as far as Nova Wolf is concerned, hey, nothing against them. I mean, at least for me personally, I'll just say this: that they gave us their best deal based on information that they had access to at that particular point in time. I think they were listening to us even on the day of our first meeting with them. They did make some adjustments last minute. I thought that was very cool of them to accommodate. I mean, and I would appreciate, like, anybody else listening in on this to kind of, really, if you're listening in, then I mean, I think the tone has been very clear. So if you're intuitive enough and you really have the best interests of these creditors in mind, your numbers will speak volumes to us. So hopefully you'll put your best and final tomorrow, and you'll take into consideration those facts, and you'll take into consideration that this is really about the industry moving forward and not just about you know I guess distressed asset investment profitability. I guess that's a first principles consideration for any bidder in this auction to take. I will say this: I was a little disappointed, and Simon, I got to tell you, man, I might have been your first troll starting off. I'm not sure, but hey, man, you never freaking banned me or blocked me or whatever. I don't think I was that bad on you, though. Mary would probably be the best person to judge. She did kind of intervene in a couple of times. So I mean, but hey, I respect Mary. Respect you guys. I will say this: I did get banned by Arlington today. It was very strange, man. I'm not that bad. I don't think, at least. I mean, correct me if I'm wrong, but hey, floor is yours.
Yeah, okay. No, I don't think we've been involved in any blocking. The only I prior to this whole saga, I never blocked. I didn't actually have any blocks other than bots. But I set a policy that if you ask me the same question 1,000 times and then you just keep recreating the same thing, even though I've already addressed the issue, then I just can't be asked to answer that again. So that was my blocking policy, and early on in this stage,
I
I
think
was
that's fair.
answering the same question time and time again. And Otis and everyone, where they would just add it, where it just felt like bad acting to me, because they were just asking the same thing again, so that I have to answer again, even though I'd already given the answer. So that was kind of my blocking policy, and then life just became better because I had more time for people that were actually engaging in this process, that I think were just out for the most amount of creditors. So that's my perspective from this whole experience. In terms of where we are right now, I'm a big believer in that everything happens for a reason. You put out. I've always believed that you put out a karmic force, and then the universe conspires to put you wherever you're meant to be. And really, we are in it. I think if we had stuck to the original timetable, we tried to do this post FTX, and we wouldn't have got this scenario. It wasn't possible. It wasn't the stars and the moons and the universe just weren't lining up in the right direction. And so, as painful as it is, maybe all of this delay was needed. But I'm really happy with the process we have tomorrow, and I think now is the timing to do it. And if we can just get through without having the big roadblocks that can delay unnecessarily, then I think we're all going to be hopefully cheering at the other side of a job well done, and looking to maximize everything. I still believe in that, but I'm a bit of more of a positive guy, believe it or not. I mean, sometimes this process brought out the worst in me. But I think it's done that to all of us at certain points in this process.
I think it's okay to be cautiously optimistic. I mean, but maybe, my optimism was in a different direction, right? So, yeah, I mean, at the end of the day, I mean, don't leave any stone unturned is all I got to say. I don't know if that's, I don't think there's anything negative about that, to question anything. So, I mean, if you don't know, ask the question. The only thing stupid about asking a question is that not asking a question at all. That's how I've always, it's really been my mantra.
Yeah, and you need your Cam Cruises and you need your Keiths that always see the other side of the optimist. I've always found that in a team, you need that person that doesn't get easily excitable about certain things, and they see the downside, and then they also need the person that is driving forward with something that seems quite unreasonable to them at the time.
Absolutely.
And that's a team effort, and that's what we have in this creditor group.
It helps keep it balanced. So shout out to Helsius.
Yeah, I love the Helsius videos.
Louis?
Hey, thanks for taking my question. Hi, Simon. I have two little questions. One is an easy one. What is going to be the Bitcoin price for our claims? I'm a little unsure about that. And the second question is, who's going to decide what to do with the Alameda loans that Celsius holds? Is that part of the plan?
So part one is the price of Bitcoin at the petition date will be used in order to determine the percentage of the estate you own. And so lobbying in order to change that, to update the prices to today, is not going to help in any way, because all it does is
I'm not asking that. I'm asking what is that price?
Oh, for Bitcoin, I think it's 19,500.
Because I keep getting different numbers on different sources, and finding the exact time is somewhat tricky. So I just haven't found a source of truth for that.
Yeah, I don't know.
There is a table in the docket, and the price is 19,800 per BTC on the 13th of July.
There you go.
Thank you. I'll look for the table. I looked. I could not find it.
I'm going to pin it. I'm going to send it to you.
Oh, thank you. And yeah, the second question is around the Alameda loans. I looked through the docket of FTX, and on there you can see the size of the Celsius loans to Alameda, and it's quite considerable. And what's going to be the process around that?
Yeah, so the institutional loans will go to the NUCO. And so if it requires litigation, then you'd imagine that the litigation, I'm just thinking through it, I don't know the answer, but this is what I think would happen. I think maybe the NUCO could say to the litigation trust, appeal to the committee of the litigation trust. Those are two independent groups, is my understanding. So you have one entity called the litigation trust and another entity called the NUCO. The NUCO is what everyone's bidding on tomorrow, and the institutional loans will be, all of those involved in the bid have had access to the data room, and the data room outlines all the different, whether those are bad loans or good loans. And, you've got a couple of counterparties that are in Chapter 11. You've got Core Scientific, you've got FTX, we've got Voyager, which the fee examiner hopefully is pushing based upon Manny and Frischberg's motions to try and save a bunch of money there because Kirkland screwed up. So I think you'd have this, maybe the NUCO could lobby the committee at the litigation trust and say, can you litigate this loan? We think it's going to be worth the investment. Maybe that's how it will work.
Interesting.
Yeah, but it's not going to be resolved. FTX are actually going for their own reorg. They found $7 billion of assets, and they're
well, it's an Alameda loan. It's not an FTX.
Yeah, sorry, I put those as one. Yeah, Alameda's dead, so yeah.
Alameda is muerto. Okay. Well, thanks a lot. I appreciate that. I'm going to think about that, what that means for my recovery.
Okay, cheers. Mary, I didn't want to go on this long. How long have we done?
I believe we've been for about 2 hours almost.
Okay.
And you
If we
don't,
could
I
just
don't have
take.
anyone else.
Okay, cool.
Yeah,
Let's wrap it up here then.
yes, 10 minutes. We are 2 hours. That's fine. 10 minutes
Okay,
max.
cool. All right, everybody. May the force be with us all tomorrow. I think it's really exciting to just be involved in a live auction of a Chapter 11 with 600,000 creditors, and however many end up signing the NDA. That's a really exciting process. I'm very curious. I'm sure there's going to be loads of technical issues, and whenever you have lawyers running technology, everything tends to go wrong. So let's see how well run it is and what happens. And I think we can all rest assured that although we'd all like much, much better things in certain areas, at least these three groups all trying to, push each other with two teams of investment banks on both the UCC and the debtor side, without some of the, the different games. I've never seen throughout this whole process. I've never seen the debtor and the UCC more aligned, because the debtor stopped trying to protect the fraudsters. All of that stuff, hopefully disappears. And they recognise that giving all of the, that they're almost to a certain extent on the side of creditors in many of the decisions at this stage. But we still got to remain vigilant, be aware. Many more games, many more hurdles, and so let's see exactly what comes out of tomorrow. But we just got to progress. We've got to be efficient in our negotiations, and we've got to just make sure that we get out of the other side of this and be aware of all the games. So yeah, I'll see. I hope I did schedule in a post live auction space for tomorrow. I'm not quite sure how it's all going to work out, but we may be on this again tomorrow to figure out. But anyone that attends won't be able to talk about it, so that's going to be an interesting one. We'll see how that goes. Thanks, everybody. Bye-bye. Thanks, Mary.
Thank you. Bye, everyone.
Yep, thank you.